We'll try to get caught up in the schedule, so we'll go directly without a break to Dr. ASMAA SAMI from Central Bank of Egypt. Then she'll be talking about antitrust regulations in Egypt and the effect on the economy.
Hello, good morning. Yeah, so sadly, I can't share right now my video, but I guess it's okay.
That's okay.
First, yeah, of course, it's thank you for giving me the opportunity to be one of the speakers today. So today I'm going to talk about the antitrust law in Egypt and the difference and the milestone happened in applying competition regulation in Egypt. First, let me take you on a tour about the antitrust law in Egypt and its application. First, the antitrust law was issued by the protection issued in Egypt in year 2005 by law number 3, and according to this law, we Egypt established the Egyptian Competition Authority in 2006. The authority was the only institution in Egypt that has the mandate of applying and enforcing competition law and regulation across over all the economic sectors in Egypt, almost for 14 or 15 years. ECA, or the Egyptian Competition Authority, was the sole implementer of the competition regulation in Egypt. Then, in 2020, there was a major change that took place when the Central Bank of Egypt decided to have the mandate of applying the competition regulation in the financial sector. So, after amending the Central Bank of Egypt law in 2020 and issuing law number 194, the central bank started to be the one who is responsible for applying the mandate of competition in all of the financial sector in Egypt, which considered to be a precedent in applying competition regulation because before this new regulation of the central bank, ECA was the sole authority who was responsible for applying the competition regulation, just as in all of the competition authorities around the world. Only in some small cases there would be not a control over enforcement of competition regulation in financial sector, but there would be some coordination between the federal and central banks on different countries and the competition authorities. But here in Egypt, it's now the mandate is only awarded for the Central Bank of Egypt to be the sole authority responsible for applying the competition regulation in the financial sector in Egypt. So, speaking about the reason behind this change, and actually the change was proposed by the Central Bank of Egypt. And the reasoning, there are two main reasons behind this change and behind why the Central Bank of Egypt decided to be the one who's responsible for applying the regulation in the financial sector. And for actually, there was a certain limit of lenient of the Egyptian Competition Authority to have the central bank to be the one who's responsible for applying and enforcing the competition regulation in the financial sector. First, the first reason was to ensure the confidentiality of the financial sector data, because the confidentiality of data, of the financial sector data in Egypt, is really very important, and one of the core and one of the actually main target of the Central Bank of Egypt is to protect all of this financial sector data. The first one, the second reason is due to the cases process of the Egyptian Competition Authority, because the Egyptian Competition Authority have a different path of enforcing the law, because in the case if there is a specific violation to the competition regulation, the ECA would refer the case to the public prosecutor, and then if the public prosecutor sees there is a specific violation to the law, the case would be referred to the economic court. So, of course, the Central Bank of Egypt has a mindset of not to send any of the financial sector stakeholders, especially, of course, banks, to the public prosecutor and to the economic court, because of it would sort of resulting in some panic in the banking sector, and there would be a fear of a chain of withdrawal of money out of the banking system here in Egypt. Especially Egypt still on the phase of developing its financial system, and it is still working into having a more financial inclusion policy, which started already to implement 3-4 years ago. So because of these two reasons, the Central Bank of Egypt decided to be the one who is responsible for applying the antitrust regulation in Egypt. So here is an overview of the competition regulation and what is the central bank is concerned with when applying the competition law in the financial sector. The first one, of course, and it is the most important, is assessing merger and acquisition. And second one is to have applying the competition law violations. As for the merger and acquisition, there are 3 types of merger and acquisition the Central Bank of Egypt is concerned with. First one is the horizontal merger and acquisition. As for the horizontal merger and acquisition, it meant to be a merger between 2 stakeholders who's playing in the same market, who's functioning and operating on the same market. For example, the merger of 2 different banks in the financial in the banking industry in Egypt, two different BSPs, payment service provider companies. For the vertical merger and acquisition, it means like to have a merger or acquisition between 2 companies who's working on the same supply chain and which have backward and forward linkages. And for the conglomerate merger and acquisition, it has a merger and acquisition between 2 different industries. So actually, the first thing, the competition unit in the central bank, and I would like to mention here the Central Bank of Egypt, after the new regulation, established a new competition unit that's specified to applying competition regulation, and that followed directly the governor himself to have. It has a specific characteristics that differ from different sectors in the Central Bank of Egypt. So the first mandate, the Central Bank of Egypt and the competition unit in the Central Bank of Egypt start to implement is actually the merger and acquisition. And the first president in this case was having a merger and an acquisition of Vodafone to one of the BSBs. To one of the BSB's companies on the market. The acquisition was about to have, the Vodafone proposed to have almost 20% of one of the BSBs on the market. And here, the Central Bank of Egypt and the competition unit have some fears of the transaction. So it approved the transaction, but with specific remedies. These remedies was more like behavioral remedies, not structural remedies. These behavioral remedies was mainly targeting to protect the competitors of Vodafone And the competitors, specifically on the downstream market, which is the BSB's market, and to have because Vodafone is considered to be a dominant firm on the upstream market in providing the communication and digital wallet in Egypt, in Egypt market. So behavioral remedies was enforced on Vodafone. And of course, these remedies was targeting to protect the other PSBs and protect actually competition in the market. And here I would like to clarify a point. When having a merger and acquisition case, there are three possible outcomes of these transactions. First one is that the central bank would clear the transaction directly if there is no harm on competition. The second one, the central bank would clear the transaction, but with specific remedies, and this would happen when the central bank and the competition unit of the central bank see there is a potential efficiencies that would happen in the market, like have a more maybe enhancing some technology, enhancing the financial inclusion policy in Egypt. And actually this was the case here in the Vodafone case, because they proposed they would have new footprint and to be working in different governorates of Egypt, which would help implementing the financial inclusion policy in Egypt. And the third case we are facing is not to clear the transaction. And not to clear the transaction, it would be a few cases, and it's already known worldwide, declining merger and acquisition. It would be only if there is harm on competition with zero efficiencies, actually. So in such a case, the authorities would decline the transaction. And honestly speaking, it is just very few cases around the world when there was a decline in specific transactions. So moving from merger and acquisition to the violations in competition. Competition law prohibits three practices. These three practices are the horizontal agreements and vertical agreements and abuse of dominant position. As to the horizontal agreements, horizontal agreement refer to agreement concluded between undertaking operating in the same level of production or distribution chain. Yet, though it looks like it would be a little bit difficult to be applied in the financial market, but no, we have already seen some cases, as in Italy, for example, there was an antitrust case where almost four banks coordinated together and had some sort of market allocation between them. And away from this case, there was another case in the EU also, where banks agree had an agreement on the price of interest rate. And of course, away from this, in Egypt, for instance, we decided not to rely on the LIBOR because most of the competition authorities and the competition unit in central bank thought it would enhance collusion and collaboration between different banks, and it would hinder their incentive to be competing together. So horizontal agreement is also a well-known practice on the financial market, yet still we didn't detect any one of the horizontal agreements in Egypt, but this is due to the competition unit itself. It's a new here established few time ago, almost 2 years ago, and we are still working on the regulations itself that would enhance applying the mandate of the competition in the central bank. So of course, there would be, for sure, there would be sort of agreement between the different stakeholders on the market, because not all of the stakeholders, and honestly, a large portion of them are not well known of the competition regulation, and actually, this is one of the this is one of the challenging we are facing in the competition unit in the Central Bank of Egypt. The second one is the vertical agreements, and vertical agreements is a term used in competition law to denote the agreements between firms at different level of supply chain. So there would be an agreement between one of the market players and its own supplier, one of their customers, and generally speaking, vertical agreements have some conditions to be a violation, and the cases around the world and the vertical agreements is sort of limited, and still it is not that clear in which context we would face such a vertical agreements in the financial sector here in Egypt. And the final violation that could be considered to be one of the violation of the competition law is abuse of dominance position. Abuse of dominance, of course, occur when there is a dominant firm or a dominant group of firms engaged in a practice of anti-competitive acts. But here, before moving to how would a firm or a group of firms abusing the dominance, there are some certain conditions to have a firm to be considered as a dominant firm. The first one is to achieve a specific threshold of market share. And here in Egypt, we consider 25 to be a reasonable threshold of market share to be considered to a firm or a group of firms to fulfill the first condition. For instance, in the EU, they consider 40% of the market share is the first threshold of having a dominant firm. But in Egypt, and due to the difference in economic conditions in the market, the regulator considered 25 is to be an appropriate level of threshold. The second condition of the firm to be a group of firms to be a dominant in the market is to have a sort of market power, or to have a market power. And by market power here is considered or meant to be having the power to influence the prices or the quantity of the product in the market. And here, to just say the company or the firm is having a market power, it has some different characteristics, like there is a huge or a really big difference in the market share between the companies that we thought it is a dominant and the second market player, for instance, and the market is highly concentrated. And of course, we would assess barrier to entry to the market and barrier to exit. And here, in our case, of course, in the financial sector, there would be, we can consider the existence of barrier to entry to the market, at least from the regulation and the regulatory term, because there is a specific license that need to be acquired by any new entrant in the market to be one of the market players. And of course, the huge investment needed to be one of the market players. So the financial sector generally, and in Egypt too, is considered to have a specific barrier to entry, which give a protect to a company if it were having already a dominant position, because there would be no fear of new entrant and hence new competition. And it's just facing the competition already existing in the market. And here I would like to clarify the abuse of dominance. Having a dominance, a firm to be a dominance itself, it's not considered to be a violation, and firms shouldn't be punished to be a dominant. But as a firm is a dominant, which mean it has a market power and has a specific specific market share of the market. So the company has what we call in competition special responsibility, and its special responsibility means there's some acts this firm can't, or company or bank or whatever financial institution, some acts it can't be done by this firm, though it is allowed by the other firm who are not in a dominant position. These acts could be exploitative or exclusionary, and impact competition, have a negative impact on competition in the market. For instance, exploitative practice could be like enforcing excessive pricing on the customers of a specific bank, if a bank have a market power. And it could be also by discriminating between two different customers. And here by customers, we usually mean professional customers. For instance, if we went back to the Vodafone case, where Vodafone is a provider of e-wallet in Egypt, in the Egyptian market, we can find that Vodafone was its dominant position. It can discriminate between two BSPs providing their service to Vodafone by, for instance, giving them different offers, or giving them different commission, or different contracting rules. And in this case, Vodafone, if this would happen, in this case, Vodafone would be considered as having a firm with a dominant position, applying an exploitative practice. As well as the exclusionary practice, it could be done by exclusivity, for instance. And here, exclusivity doesn't mean is to have an exclusive contract with one of the market players, specifically on the downstream market. No, it means when I enforce one of the suppliers or one of the customers not to not to have any commercial connection or any commercial relationship with the competitor of the upstream competitor market to the dominant. And here, let me explain more. For instance, if we had Bank A and Bank B, Bank A is a dominant bank, and Bank B is a bank is a commercial bank who's competing with Bank A, the dominant one in the market. Hence, if one Bank A enforces, for instance, companies who had some loans from from Bank A not to have any other loans from Bank B, here it would be considered as an exclusivity, because it would affect the competitiveness of Bank B, and this is one of the forbidden practice for a dominant position. Also, predation could be considered as an exclusionary practices, and predation here in competition, it's a little bit difficult to prove, because especially in the financial sector, because of its character, and it's really challenging, because predation means is to price a specific product below its cost, and cost here could be average variable cost or marginal cost according to the nature of the market. But the problem here is to have the correct estimate of the product itself, and to be able to consider and to reach the correct answer if the bank is For instance, if we consider private loans as a market by itself, and we would and here we started to think about if Bank A, who's having a market power, is selling the private loans to the customers below the cost it incurred. So we would like to here to first prove what is the real cost of the loans itself, private loans that the bank incurred, and then we compare the cost of these private loans with the price that provided to the customers, and hence, if we find the cost is actually above the price provided to the customers, here would be considered to be a violation by the bank. But yet, competition law in such a case would also take into consideration the other economic aspects of the market, because in sometimes having a predation could be due to excess supply in the market, which infers the market players to have a specific prices below the cost itself. And hence, I would like to take you into a tour about the applying competition regulation on the financial sector. Actually, applying such a regulation in the financial sector, which is already complicated, it's really challenging by the nature of the banking sector and the financial sector itself, because it really have a heavy barrier to entry and a high switch cost, which enhance the existence of anti-competitive practices, and also I would like to mention this in Egypt, because the banking sector in Egypt, it's a little bit complicated and differ from the other countries, because we have some national banks and some commercial banks. And the national banks is the oldest banks in Egypt, and it's really had its own brand name, and most of the Egyptian people trust those banks. So they gain the trust, and switching from such banks to the other commercial banks, it would be a little bit challenging. But yet we are seeing some success between different new commercial banks, relatively new commercial banks in Egypt. And also regarding applying the competition regulation on financial market and financial sector, it's challenging actually, because there's this debate about which limit of competition regulation should be applied in the financial market, because it could be having over enforcement of competition regulation would have a negative impact on the financial sector. Some experts and economists claim and argue that the 2008-2009 financial crisis resulted from the high degree of competition for the banks, and also having competition regulation under enforcement would have a negative impact on competition on the market. So it would be more like having a sort of balancing competition policy when applying the competition regulation in the financial sector. Due to its nature, it's a very sensitive sector, and of course it's different from the real economy sectors. For instance, we can go and enforce competition regulation by the book, for instance, in the steel market or cement market or food and agriculture market. But in financial sector, no, we had to be very careful because as I just mentioned, having over enforcement and under enforcement of competition in the financial regulation sector would had its negative impact. So it's challenging to reach to the reasonable limit of applying competition regulation in the financial sector generally, and of course in Egypt. And here I would like to mention the challenging in applying competition regulation in the financial sector in Egypt, because though the competition authority was established in 2006 in Egypt, but there is no previous precedent of applying competition regulation in the financial sector here in Egypt. So the competition unit in central bank is having a challenge represented in lack of awareness with competition regulation between the different stakeholders, starting from the CBE. It's a new mandate here in the CBE and the competition regulation unit, unit established in the central bank, established 2 or 3 years ago. So it's sort of course, new unit in the central bank. There was no calibers who was working on the competition field in the central bank. That's why the central bank got some support from the Egyptian Competition Authority and acquired part of the calibers from the ECA, the Egyptian Competition Authority, and actually I'm one of them. The second challenge is the bank and other financial institutions have some resistance toward new commitment and applying new regulation, because of course when any stakeholders like banks or financial institutions they already do have commitments towards the central banks and the regulations, which is much more older than the competition. Than with the competition regulation in the central bank. So it would be a sort of resistance. Oh, we have to apply for for instance, when they are having sort of M&As, they have to apply not only for the credential sector in the central bank, it goes to the competition unit. So they think they have not to submit the regular data they used to submit. No, they have to submit a new data, and there would be a potential commitments on them after if the deal is cleared. There would be a new commitment they would be committed to, and this is new for them. And of course, the complicated structure of the banking sector in Egypt. Egypt still has 2 national banks, and actually they have a significant market share in the banking sector. And actually, it's beneficial to have a national banks in Egypt, because, of course, it helps to enforce the monetary policy. But yet, having this differentiated banks overview and different in structure, and to have different competitors in financial market out of the financial market itself. As I mentioned, Vodafone, which is a well-known telecommunication company, it do provide electronic wallet in the Egyptian market, so it's already competing with banks in the e-wallet in the Egyptian market. And there are some different small financing companies who's within a different authority, following different authority, and have some rather than central bank, and still need to have a specific license from the Central Bank of Egypt. So it's a little bit complicated. The sector itself in Egypt, it's has different. It's a little bit complicated, with different market players, who's some of them following directly the Central Bank of Egypt, and another part of them is following Central Bank of Egypt and another regulatory bodies in Egypt. But yet, the central bank is moving forward, applying the mandate as it could be and at the best level it could be. And thank you for giving me this chance to talking about the competition regulation in Egypt.
Yeah, thanks a lot for the enlightening talk, Dr. Sami. So there's just a few questions that that people had in our audience. One was, do all market economies need the same or similar antitrust laws and the same tools and principles? I'm guessing there's some domestic conditions that are unique to Egypt.
Okay, so let me have some explanation about competition regulation. Competition regulation first was found in the US almost 200 years ago. And then in the 18th century, if I remember correctly, the EU started to have a competition regulation, and now it's a well-known authority all around the world. All of the countries, almost 99% of the countries has now its own competition authority. Yet there are well-known established competition authorities, like in the case of the EU and US first. And there are some recent, of course, because I'm from Egypt and Africa, so there are some new competition authorities started to be established in Egypt and Africa and any other developing or emerging countries. So yeah, it's already needed to be in all of the countries, because it's sort of when we have a strong competition regulation in the country, it has benefits, and these benefits would be directly go for the customers, because when we have a strong competition in the market, it would enhance enhance that the customer has the best price or the best quality, and of course it enhances technological progress in the market, because always there would be a need for companies to have sort of R&D and develop its product to be differentiated, and would be able to have sort of setting its own price on its own product, rather than be committed to the market price. So yeah, it should be, it is already on in most of the countries.
Yeah, that's clear. I was wondering if there's any unique circumstances that are special to Egypt and the Egyptian economy.
Yeah, this unique circumstances that it's related to the development of the competition authority in Egypt itself, because when the Central Bank of Egypt decided to be the one who's responsible for applying the mandate of competition regulation in the financial sector in Egypt, it was because of there was no previous implementing of antitrust regulation in the financial sector in Egypt, though there was already a competition authority in Egypt. So yes, it was a very specific. Could be considered to be a specific case of having the competition regulation mandate with another authority, rather than the regular competition regulation authority for the world.
Okay, yeah, that's clear. I had one question. So the antitrust regulations help to prevent market distortions that, as you mentioned, can influence the cost or the quality of products that end users can obtain. But do they also have the side effect of maintaining the relative rankings of players? Because if you can't do overly competitive actions to gain market share, it seems like you would have more or less the same players at the same levels over time.
Okay, actually, this is a good question because competition is meant to protect competition. Competition authorities and competition regulation is meant to protect competition in the market, not competitors. And here, I know in some cases, harsh competition could lead to existence of some of the market players, but it always claims that whomever is exiting the market is the less efficient competitor who can provide the products at the best quality or provide it at the best price, or it's not working enough on R&D. So yeah, in some cases, harsh competition, and for me as an economist, away from being an competition expert, over enforcement of competition, sometimes, or maybe in a few cases, yeah, would have a negative impact on some of the market players, but it always claims that there are the less efficient market players, and that's why they would be exiting the market. But by the end of the day, it would be always benefit for the customers, whomever is a regular customer or professional customer, to have a strong competition in the market, and hence always have the best price and quality.
Yeah,
I hope this answers your question.
well, it's quite a complex thing because if you have too much competition, this was termed excess competition in the Japanese case in the post-war era. You had people kind of undercutting the selling things below cost, as you mentioned, is one of the activities, and that can have a short-term benefit to consumers, but long-term it's a bad thing. So it's good to have some regulation. And in Japan, there was actually in the post-war era of high growth, there's more than 100 regulated monopolies, and this allowed people to have monopolies in a market segment, but it was under certain supervision from the government, and that seems to be a good balance that that you can find. I had one final question, and that's is there a standardized data format that's used globally for this kind of reporting, or is each regulator setting their own unique reporting standards and data format?
Okay, so the standard of competition itself, it's already unified worldwide, but there's some specific differences. For instance, having a market share, the first condition, for instance, to be a dominant in the EU is to have a market share of 40%. And here in Egypt, to be a dominant is to have a 25%. The first condition is to have a 25% of market share. So the difference is not in the conditions itself, but in how to apply it. For instance, the market share, it's different across the countries. But for instance, collusion and cartel, it's almost the same across all of the competition authorities. So having cartel is a hardcore violation of competition. So cartel, it's forbidden in all of the countries. Price cartel, quantity cartel, market allocation, whatever the cartel is formulated for, it's forbidden with the same way across all of the countries, but for some specific, like determining the characteristics of the dominance, or assessing the vertical agreement between two different undertaking in two different markets. Yeah, this could have some specificity in applying, but it's still has the same curve.
So yeah, thank you very much for your time, Dr. Sami, and have a good day.
Thank you. Thank you. You too.
An ancient prophecy foretold an eclipse that would open a portal to a mystical world, the world of Soratopia, where honor, valor, and swords determine your fate. You can become one of them. Choose your path. Become a true samurai. Explore the vast world of Soratopia. Defeat mighty bosses in various locations. Your sword is your strength and honor. Don't worry, you're not alone. In Soratopia, you'll find loyal waifus to relax with. Engage in the game, pray, complete quests, and accumulate points to become eligible for a massive airdrop. Your path determines your destiny. Choose wisely. The eclipse has awakened, and so have you.
In the city haze, Sora's here to change our ways. Virtual coins in cyberspace, dancing through this endless maze. Future's brighter, pixel glow. Crypto waves begin to flow. Binary beats we start to show. The blockchain is the star of the show. Digital dreams unlocked.